Good morning, afternoon, good evening. Hi Diana, hey Ola, hey Janby, how you all doing? Hi Vel, hey Nick, how you doing? In a couple of minutes. Hey Spiros, how did you guys go for the non-farm payrolls? How did you go for the NFP? It was a big surprise. It was a big surprise. So let me know if you went well, went okay, or if you did badly. As usual, a couple of minutes before we get started. Happy Monday. Happy Monday. Brand new week. See what's in store for us this week. Hey Sarah, how you doing? How did you go for the non-farm payrolls? Did you get into any trades? Put it into the chat. Let me know if you got into any trades. Good morning, Goju. How you doing? The hit was not on right. I hope it's on right now. I hope it's on better right now. So if ever you do not too well, if you did badly, just remember next day is just another trading day. It was just a trading day past and just another trading day ahead as well. So just make sure that you stay consistent, not consistently bad, but you stay consistent so they approach the market all over again. Did not trade any euro pairs. Good morning, Joshua. Hey Frank, how you doing? One more minute and we shall get started. Buy Aussie US 1 minute. I hope you meant bought it during the non-farm payrolls. If I remember correctly, right now it seems to be retracing. It was retracing the last time I looked at it. Nice to meet all of you, everyone who is watching right now. Good to have you guys with me. Alrighty, so let's get started. Again, Monday, brand new week, 10th of July right now. So thank you all for joining me on this daily market analysis. Good to have you all here. 3 p.m. GMT plus 8, where we look at the fundamentals, what we saw. We do a review of what we saw last week in terms of the non-farm employment change numbers. And then we'll look at the fundamentals in terms of what's coming up, and then into the technicals in terms of where price is, where price could head towards. It is retracing a little bit at the moment, but you can see where prices could head towards. Combining that together, we're looking for some possible trade setups. Again, if you are new to the session, do put a comment in there. Say hi, let me know where are you joining from. I'd love to find out. If you can help me out, click that like and subscribe button, whether you're on YouTube, whether you're on TradingView or on trading.live or any other platform that you're watching this on right now. Do help me out, click that like and subscribe button. I'm pretty sure it helps us get more people onto the stream, so That would help massively. And lastly, the link is there again for you guys. I know my regulars are sick of seeing this link already, but the link is there for you guys to join the Discord channel if you haven't already. That's where we can take our discussions beyond this 1 hour session, just sharing our views of the markets as it is happening. All right. So with that said, we'll get started. One more thing is, if you do have any questions, any particular pairs you'd like me to look at, do put it into the chat. Let me know. I'll be happy to do that for you guys as well. Hey, Robbie, how are you doing? And also, good morning, Matic. Good to have you with us. Okay. I am planning. I have a trip to Dubai planned. I have some work there. It is. I know it is freaking hot, but unfortunately, schedules have to be met. So just have to bear with the heat. So yeah, Diana, I'll tell you. I'll message you about the plans, and if you're in town or if you're in the area, we can always catch up. Okay, and that's also why I want to know where everyone is from, just in case I'm in your neck of the woods. You could always catch up, talk about trades, not talk about trades, or talk about anything else as well. Okay. So, as usual, quick disclaimer, any information contained on this webinar should not be construed as advice and is presented as educational material only. Please do your own due diligence because the contents of this webinar is not intended to be a recommendation to trade a financial product. It is really how I view the markets, my opinions, what I think is possibly going to happen, my scenario plan, my own trade plan. So, how you could best use this is do your own trade planning, watch this or join me on the session, and then see if our trade plans align. That might give you a little bit more confidence. I'm not always right. I'm definitely not always right all the time. So it might also, give you another alternate view that maybe your trade plan is based on your style of trading. It's going to work better for you. Let's use this as a bit of a sounding board. All right. So many different ways to use the stream, but it would definitely be beneficial for you guys and works better if you interact as well. So put the questions in, ask questions, clarify some things. I'm here for you guys. All right. Your objectives, financial situation, and needs has not been considered, and you should consider its appropriateness to your circumstances. Alrighty, so with that done, let's get to it. All right. Good morning, Angel Case. How are you doing? Hey, Reza, good to have you with us. Hello, Gabriel. Good to see you. Hi, Jamilu. Long time no see. Good to see you again. Alrighty, so looking at the news here, what we're looking at, not much today. So not much today. I'm not too concerned in terms of the news today. You see that we did have the Chinese CPI number year on year was 0.2, expected 0.2, came out at a 0. So we're seeing inflation growth in China slowing down, right, to 0%, no change year on year over this period. So that's relatively good news, which actually brought some additional downside to the Aussie dollar. Okay, and you can see based on that headline, Chinese CPI, there you go. Aussie US remains below 0.67, moves little after Chinese inflation. Okay, it is retracing back down now from the big surge on Friday. So what happened on Friday? Brought back a little bit. Basically, we had a very big upset in terms of data release. All right, so on Friday we were talking about potentially good news from the employment change numbers, driven because of the expectation we saw from the ADP non-farm employment change on Thursday. ADP non-farm employment change on Thursday was 278, revised down to 267. Expected 226, came out at 497. Big surprise there. We saw the dollar strengthen before coming back down again, and then that led us to believe or to anticipate that the US non-farm employment change number was going to be possibly that 300 number. I remember running this informal poll during the stream on Friday, and everyone, pretty much everyone, expected the non-farm employment change data to be higher than previous, higher than expected. What came around was that it got released at 209K. It was 339, got revised down to 306, expected 224, came out at 209. So a relatively big upset there in terms of employment numbers for the US. Unemployment rate dropped slightly from a 3.7 to a 3.6 as expected. And average hourly earnings, a little bit surprising, it stayed at a 0.4. So it got revised up to a 0.4 from a 0.3. Expected to stay at 0.3, but it got revised up to that 0.4. So wage inflation still growing slightly. Wage inflation still growing slightly, but overall, the main thing here was that surprise, that 209K. And because of that surprise, what we saw on the dollar index on Friday, take that away for now. Right, so this was the news here at 8:30 GMT plus 8, so it was at that point. So the dollar was actually consolidating along this range at 103. Right, we were anticipating that because we were thinking might be good news for the US, we were looking for it to spike up before turning back down. Did not happen. Consolidated there at 8 o'clock as the news was released. 209K, we saw a big downside on the dollar. Right, big downside on the dollar, pushing all the way down from 103 to test at 102 almost 102.20 level. Right, earlier today it has been retracing and now looking like a continuation to the downside. So you'll notice that I just deleted that fib retracement levels because I was just testing that as it was retracing. I drew that earlier today because as it was retracing, I was thinking, how high can it go? Right? How high can it go? I see that there was a 38.2 there, which was at a 102.80 level, and then 23.6. So I was, from my view, I was looking at it as if it broke above 23.6, it could climb up to 38.2. Okay, what we saw, what we're seeing right now, it is rejecting that 23.6 level and looking like it's going to continue to the downside. So I'll take these away because that didn't play out because of the surprise employment numbers. But what I do like, take this away as well because it's been broken already. Good afternoon, Desiree. How are you doing? And the main level here is that 23.6 level. Okay, 23.6. Alrighty. Okay, so now that we see this, clear it up a little bit. Okay, we see how it's rejected the 23.6 level and looking like it could push to the downside. So what I'm looking for now is a stop here. Testing that 23.6, testing and rejecting, looking for it to possibly continue to the downside towards that 101.94, 101.95 level, which we've seen over the last, since May, test this level, bounce. More recently, 22nd of June, came down, tested this level, and bounced back up. Okay, so what I'm looking for is a continuation to the downside on the dollar index to reach that 101.95 level, test and bounce. Okay, that's what I'll be looking for. Hey Jordan, how are you doing? Good morning, Buba. And hi, AYJ. Good morning. All right, so why am I thinking that it's going to come down? Right, basically, it's a continuation of what we saw on Friday. But why I think it's going to bounce back up, it's really that idea and the headliner. Where is it? Let me find it. This is the headliner where there, right? U.S. jobs show signs of slowdown, but won't deter the Fed. Right? What won't it deter the Fed from doing? It won't deter the Fed from a rate hike, possible rate hike in. There we go. This will do nothing to alter the outlook for another interest rate rise at the 26th July FOMC meeting. Okay, so what I'm seeing now is a continuation because of the sentiment from that 209K, but I'm anticipating that it could come down, test that support. Then we're moving towards the idea that the Fed is still going to increase rates, looking for the dollar to bounce from that 101.95 level. All right, hope that makes sense to you guys. So I'm looking for dollar index, a continuation to the downside to 101.95. Then could bounce from support. There we have it. Right. So why I'm looking at this quite quickly is because if you look at the news again for today, no big news, right? We do have some member bar speaking. It tends to be a little bit hawkish sometimes, but overall we're still looking at no big news, right? So I'm looking because of this, because there's no major news, looking for that continuation to the downside. There is also that line where hedge funds abandon bullish dollar bets on peak Fed speculation, thinking that the Feds could have peaked on its rate hikes, approaching the end of its interest rate hiking cycle. In the long, if you're trading for the longer term, I think that would be valid. But if we're looking at the short to medium term, then we're looking for slight downward move, possibly going to range in between 103 or 103.50 to 101 or 102, right? Going to range in these levels, maybe for an extended period of time. So that's why I'm looking at it come down to test the support before bouncing back up. Then, if you look at it as well, because we're on Monday, so tomorrow we do have claimant count change numbers to be released for the UK. It's relatively straightforward. Until Wednesday, we do have the RBNZ with the interest rates decision looking to hold at 5.5%. US CPI looking to go from 4 to 3.1. So we do have a bit more volatility to come later into the week, especially on Wednesday. Bank of Canada with the interest rate decision looking at a hike from 4.75 to a 5%. So looking at a hike to come from the BOC of interest rates. Then through to Thursday, pound GDP, US coal PPI and PPI, and then a little bit quiet on a Friday this week. All right. So with that, that's why I'm looking at this as you might see it trade down slowly, and then maybe with the CPI data to be released at 3.1%, we might signal that the dollar just needs another push to get it to its target level. So, factoring in a little bit of a bounce on the dollar index later on from the midweek to the later on in the week. Okay, so any questions on the dollar index at this point? Any questions on the dollar index? Put it in if there is. If there isn't, say no. Let me know. If it's all good, no questions. Thank you, Gene. So with that, then we'll look at the Kiwi dollar. Okay, Kiwi dollar. Obviously, we were saying that on this, did you read? Oh, on Friday last week, we were saying that Kiwi dollar, if it was a good NFP, we were looking to sell. Obviously, big upset. So it wasn't a good NFP. We in fact saw Kiwi dollar bounce or shoot up, continue to the upside from that 0.6170 upwards 62 about 6220, which you would notice has that level there. Okay, put a dotted line there, and you see why it came up to this level and stopped. It was the previous high that we saw on Thursday. It was also the previous high that we saw on the 22nd of June. So it came up to that level, tested, and turned back down. At this point, anticipating back the levels again. You see that it came down since the big move on Friday through late Friday night, Saturday morning, came all the way down. This morning it came down, tested that 50% level. Zoom in a bit. Right, tested at 50% level and it's bouncing back up. Also driven by what we saw on the dollar, how it's tested 23.6, turning down. Kiwi dollar tested 50, looking like it's pushing back up. Not ready. I would say be a little bit careful. You might be tempted to rush into this trade, thinking that it's going to continue to the upside. I think it's not ready yet. In fact, looking at the way it's moving, I think that it could sit here for a little while. I'm definitely looking at further a continuation to the upside for now. But I think it could sit here. Check. All right. I would like to say that it could test 1.8. Right? It is a little bit early. I think that we're definitely looking for it to retest this level. I think it's going to sit around here. What you could be looking for is not a big difference. 6166, 617, about 10 pips. Look for this hour to close, right? If this hour closes above 50%, then you could be looking at 0.6186 or 0.6185. Then 185. Take profit 30 pips. Stop loss 25 pips. Stop loss of 25 pips. I would say that you could try for 30. So it's almost a 1:1 risk reward. Why I'm hesitating is because if this continues, we could be seeing it push back up. Okay, what I think is going to happen here, it's going to sit there, right? I would like to see the Kiwi dollar test and bounce back up, right? Where we could be entering a trade at 6180 for about a 20 pip stop loss, and almost a 40 pip take profit to the upside. If it sits there like that, then I think even at about this level will be fair to enter. So you can have it quite close, 618.180. Let's look for 6180, a continuation to the upside, 20 pip stop loss, almost 40 pip take profit. Okay. Continuation because of some dollar weakness expected. Fantastic. Thanks, Val. Thanks, Ola. Thanks, Jamilu. So we're looking to buy 0.6180, stop loss 20, take profit 40. Looking for continuation for the dollar to push down. I think it's going to sit there a little bit before pushing down. That's why I'm just wondering what's going to happen here. Okay. The Aussie dollar. Aussie dollar is a little bit different, right? Look at this. It's not retracing. It's not pushing back up as what we see on the Kiwi dollar. I would maintain this view on the Aussie. Why? Because of the Chinese CPI number that's adding on that downward pressure, and also given that it failed to break above 0.67. Right, you can see a very nice rejection at 0.67 where we saw it reject over the last couple of times. Okay, so it tested this level and it's pushing down right now. At this point, take this away. I would say that because it is pushing down, you could be looking, this is a inverse to the Kiwi dollar. At this point, you should be very careful. Okay, why I say that is because it's not very far away. Right, we do have a level at 6590 or 0.66 right there. And you can see that over the last couple of days or last couple of trading periods, 28th of June came down to this level, set there, bounced back up. 6th of July, set there, bounced back up. Right now it's at 6642. So if you were to try and sell this down, then you would be looking at a best case of 40 pips as a take profit, but your stop loss becomes a little bit variable. Okay, so this would be a trade that you could be looking at. Most likely you'll miss it because it is coming down, unless you try to do a short-term scalp to the downside. Breaking 61.8 could give it that downward push, so you could be looking at that. Then a stop loss. Well, I don't like this so much because of where the stop loss is going to be, but you could be looking at 20 pip just above that previous candle, or you could have it just at that 50%, 6650, 15 pips away, take profit about 35 pips away to that interim level that we see at this point. Alternatively, is what you could do is wait for it to come down and see what happens at this point. Okay, so we do anticipate that the Aussie dollar could trade down, but the question is what happens at this 0.66 level, because the last two times it came here is bounced back up. Okay, so 6637, 15 pip stop loss, 35 pip take profit, a brief move to the downside before we redecide what happens to the Aussie. Very seldom you see me put a 15 pip stop loss. It's usually 20 to 30 pips, or even 30, 40 pips, but seems a little bit tight at this point. Okay, so again, remember that you don't want to be selling the Aussie and buying the Kiwi up, right? Selling the Aussie down and buying the Kiwi up. One of it's going to work, the other one not so much. I think that this could happen a bit faster. The Kiwi dollar, like I was saying, I'm possibly looking at this to trade down a little bit before pushing back up. So I like the Aussie a little bit more in the short term. I think the Kiwi dollar could bounce, but it might be a little bit later on. And also remember that the Kiwi dollar does have interest rate decision on Wednesday. So it might slow down a little bit, right? So I think that it might not push all the way up. It might just sit around this level, or maybe a little bit higher up, the lead up to the interest rate decision. Then onto the yen. I did get onto the yen. So I was selling the yen down. It came down to that almost 142 level. I closed out. I'll tell you where I closed out. I did sell that. I closed out very early at about 142.30, about there, because it's way outside that Bollinger Band. Right, once it came out, first time it came shot out, I thought, okay, I'll hold on, it bounced. Second time, I thought it might bounce more aggressively, so I got out at about 142.30, set at about 142 before bouncing back today. So now, continuing to the downside, it's working almost like we expected, right? A push down, test a level, bounce, and turn back down. I take these away. I think that if how many of you did get onto the yen? Pretty sure a lot of you did get onto the yen pairs. All right, so yen pushing down again, because at this point, I wouldn't say it's because of any stealth intervention from the Bank of Japan. I think that move early on today, I think that that's possibly, no, early on Friday, I think it was possibly that stealth intervention. That move was because of the non-farm employment change numbers, a bounce, and now a continuation to the downside. It's really because of what yen has been doing, pushing down. At this point, I would say that down and say that 145 seems so long ago. I want to see if this happens. I want to see it test 141.20. Right? I want to see it test that level. Bouncing a little bit. You could enter below 142 with an interim level there. So I think that it's going to be a little bit early to enter right now. Right? I don't think it's the right time to enter on the yen right now. You might have to wait a while. If it breaks below 142, then we could see it trade lower. Right? So 141.90, take profit, 70 pips. Stop loss can be very tight here. No more than 25 pips. Even 20 pips would be reasonable for the US yen. Right? So 141.90, 141.95, I would say even. So then you could do a 25 pip stop loss, 70 pip take profit to the downside. I like this one. It just needs to develop. That move just needs to develop a little bit more. Okay, so yen, I'll be selling down from 141.95. Stop loss 25, take profit about 70 to the downside. Dollar index was showing the downside, now retracing slightly. Going to consolidate there, but I think that we're still good to expect it to push lower. Yep, definitely have to wait for this move to develop. I don't think it's ready yet. But I've been scanning through the charts through the day before this session. I think this would possibly be one of the better setups to try and get into, especially as it breaks below that round number level. Okay, then onto the pound dollar, right? So we caught the right analysis here, expecting the dollar weakness. We were looking for the pound dollar to push up. It did not retrace as far as we expected. I did trade this up. I traded up to that resistance. Now that it's retracing back down. Okay. Then at this point, you should notice that it is retracing despite what the dollar index is doing, because it tested this resistance. Look at the last time it tested this resistance on the 16th of June. After it tested through the next couple of days, on Monday, it started trading back down. Again, on the 22nd of June, it came very close, test, and then came straight back down again. Right? It is on that recent or that near-term upward move. Right? It is on the upward move. So what I would say here is this 1.2790 level becomes quite crucial. I'm pretty sure that if I did this, right, 1.2790, it's about that 38.2 retracement level. I would like to see it sit here, test, and bounce back up. Right, so a small further retracement to the downside, test this 1.2790 level, and bounce back up. I'm just thinking whether it could break that level and trade lower. And I can't rule that out. Can't rule that out. So I think that what will be, I mean, we do have, a possible look at the Kiwi dollar. It is bouncing to the upside. Aussie dollar is sitting right there, might not develop. This one is pushing, US yen is pushing down, so I like that. What I would say here for the pound dollar is possibly planning out your trades a little bit. Right? So I don't think you rush into it. I think that hang on a second. Okay. I think that the focus for now I would have is on the US yen. My focus will be on the US yen for if it does push to the downside. On the pound dollar, I think that it's going to come down. I think that it's going to test 38.2 because of what happened here over the last two times. You could be looking for it to, let's see if it's worth doing this. Trade down to that level, 40 pips. No. Okay. What I'll be looking for the pound dollar here is that if it does break below this point, I'll be looking for it to bounce and turn back up. I know that the last time we said this for the pound dollar did not retrace as much as we expected before bouncing back up. So I'm either looking for it to come down to 61.8, which is that trend line, to bounce, or for it to come down to that 50% level before bouncing back up. Right? So anywhere in this range, just because of the way it's moving right now, and we don't see any major pound news either. We do have Governor Bailey speaking later tonight at the Financial and Professional Services dinner, so not too concerned about that. Okay. I'll be looking for the pound dollar to retrace to about 1.2760. That's about 40 pip retracement. 1.2770. Okay, so what we'll be looking for here is a retracement and a continuation. So 1.2770, I'll be looking for about a 70 pip move to the upside. Stop loss about 30 to 35 pips. 1:2 to the upside, to the continuation. That makes sense. Okay, so I'll be looking for that. big decisions on the pound dollar, but we'll see how that plays out. Okay, so 1.2770. Okay. Wait for retracement to complete. Buy at 1.2770. Stop loss about 30 pips. Take profit about 70. Okay. Looks like a good plan. I'd like to take the buy trades, but the retracements have to be completed. Exactly, Leo. As I was saying. Exactly. So I'm looking for that retrace before we buy it back up. Then onto the euro dollar, right? Tested, did not come all the way down. So we take that away, that trade did not trigger. So what you should also notice is that we did a lot of analysis over on Friday over the non-farm payrolls. Best case scenario is that it would have triggered our trades, would have made money. We've been all having a very good weekend. The alternative is that, or the medium case scenario is that we've done analysis. It does not trigger your trade because of that surprise data. It does not trigger your trades. At least you're not losing money, right? At least you're not losing trades. You're not losing money. Then the worst case is that you've done the scenario analysis, planning, don't follow the plan, and jump into trades, and you end up having a terrible non-farm payroll trades and terrible weekend. So always, do your planning, stick to the plan. If it doesn't trigger a trade, that's good. That's fine. At least you're not losing trades. You're not losing money. All right. So the euro dollar broke above that trend line very strongly to the upside. Tested, bounced off these levels. That's our support level now. At this point, tested this. It's gone to 1.0970 retrace. What I'll be looking for here, bounce off 23.6, a continuation to the upside is going to be small, right? That's not a lot of pips here for it to reach that. About 50 pip move, and it's right in the middle of that support resistance level. If you really had to force a trade, then you could be looking to buy 1.0960, take profit 40 pips, stop loss 20 pips. I think that because it's right in the middle, I wouldn't want to recommend that. Right, we do have a couple of other setups that we're looking at already, and sit there and slowly push up. Looking at the way the dollar index is behaving, I'm gonna sit there. I think that this would be a very short-term trade, kind of a scalping trade. So this would be something you want to manage closely, not an H1 set and forget kind of setup, but something that you want to manage closely. So I think that's going to consolidate along this 1.0950 level before slowly pushing to the upside. Not worth trying to do a H1 trade. Maybe if you're looking at this on M15, possible. I think it shows like it's going to consolidate there for a little while. Okay, so I'm looking at this sitting there for the upside move, but I wouldn't be looking for a trade setup at this point. What you could be looking for is a possible reaction at 1.10 for a big turn down on the euro dollar, because we are expecting the dollar to bounce from that 1.101.95 level back up. Right? We're possibly thinking that it's going to bounce from here. If that happens, Then on the euro dollar, we might see it hit that resistance before turning back down. So that then it would be look for euro to test 1.10, possible sell on rejection. Nothing right now. Okay, so one of the things that I've also noticed from a lot of people trading is that you kind of expect a trend to continue on, or like just continue on, right? You might have had good trades because of non-farm payroll on Friday, and you see a big move. So on the euro dollar, for example, you see a big move there. You go, all right, it's going to continue up. I can keep buying the Aussie, the Kiwi, pound, and the euro, and the trend is going to continue. Not always the case. Actually, the most dangerous point, in terms of one of the most dangerous points in terms of when you're trading is after a day or two after the news, especially a day after the news, because you could be looking at a retracement back all the way. So don't always expect it to continue. Sometimes, like today, right, I'm looking at the Kiwi dollar. This might happen, or it could be something that we're looking at over the next close of this hour. Aussie dollar is going to sit there and wait. So there's a waiting game there. Yen, I do think it's going to happen. Not right now. Maybe over the next couple of hours. Pound dollar possibly going to sit there, retrace, maybe a little bit deeper. So that's a lot more waiting there again. And then the euro dollar as well. I do think it's going to push up, but it's going to be a little bit, I wouldn't say volatile, but it's trying to decide on a way that is going to move, right, on a direction at this point. So just be a lot more careful especially a day after the news. Matic was saying there's a divergence on the euro pound. Take these away. Matic, are you talking about euro pound on the H1 time frame, a divergence? I think am I implying it? Okay. I think I know what you mean. So am I thinking that between the euro and the pound dollar, there's going to be a divergence in the way it moves? No, I think that is both possibly going to the upside, right? Pound dollar going to retrace a little bit before pushing back up. Euro dollar might sit there, might retrace a little bit before pushing back up. I do think that it's still going to the upside. So no major divergence, or not a long-term divergence between the pound dollar and the euro dollar. Okay, hope I answered your question there. Then US Swiss franc, obviously the dollar index weakening. No worries. Okay, push down, retracing now 0.89. You can see it's held so long, it's broken and it's retraced. So what we're looking for is the next level at 8824. Okay, and that would be reasonable if we see the dollar continues to the downside. Right? Dollar still driving the directional bias on the Sweezy. So at this point, I like to say that, to be extra safe, you would be looking to sell down right below the previous low, but sometimes you get caught out because it's at the low, it's going to bounce back up. So I would say if the hour closes doesn't close there. If the hour closes at about 8890, when it closed below 8890, so it tested a little bit lower, it's bounced back up because of the dollar index. I'm looking for it to test and break through 8890. Stop loss would be about 25 pips. Take profit could be down to about 65 pips to the downside. And that's what I'll be looking for on the US Swiss franc. Right? If the dollar recovers in strength and pushes back up, then we're going to see this come back into the range. But overall, I think that wait it out. Let's see if the dollar continues to weaken. We could see this push lower. 8890, 25, 65. Sell 0.8890. Stop loss 25. Take profit 65. Okay. Then the US CAD, right? It hit that level at 1.3383. That's a lot of threes. Tested the level, big dollar weakness, dragged it all the way back down, back towards this support level now. I like how it's setting up. Right? I like how it's setting up. Bounce now showing like it's breaking through again. Currently at 1.3281. I would say that you could, because this is not very far away, so I would say that you could be looking for this to break 1.3265. Stop loss, I would say just above that level, 25 pips. Take profit, go down to 55 pips to the downside. This is a continuation of that downward move. Okay. Again, guys, if you like what we're saying, sharing here, do help me out. Click that like and subscribe button. That big thumbs up on YouTube definitely helps. 1.33, 1.3265, 1.3265, 25. Very similar to what we see on the US Swiss franc, right? Same stop loss take profit levels. Just like the US CAD more because it is reacting to that level compared to the US Swiss franc, which is that retracement level is a little bit, it's retraced a lot more than I would like. But that's why I like the US CAD more. And if it's there, then I wouldn't even like this setup anymore. Dollar is retracing quite a bit, so I think that the dollar is going to possibly, as much as I think it's going to come down, I think it's going to sit there for a while before turning down. Right, might over this hour, maybe the next hour might bounce back up a little bit, and then before coming back down, possibly look into that. Then with that, we look at gold. Big push, so it did not retrace back down because of the dollar weakness. Big push up right now at the 1925 level. If the dollar does continue to weaken, then this is definitely going to climb towards 1932. More specifically, maybe even 1935, with the resistance at 1940. Okay, so I would say that continuation push to the upside on gold, test 1935. Continuation to the 35. resistance 40. So, why I have that there is just to remind that we're not expecting maybe huge big moves to the upside, because we could see it just sitting at that level, testing. Or it might come up to the resistance and just pause there, right? But I think that you could just be looking for it to close. If it closes above 1925 dot, if it closes at about 1926, then we could see it climb up towards 1935 quite easily. Okay, I like this. Then doing a quick one. $3 is still it's forming up nicely. I like this move. $3. This one might take a little bit longer, but it could happen. US yen is definitely something I'm watching very closely. Pound dollar, consolidate trades before bouncing. Makes sense. Euro dollar there. Squeezy, we're not doing too much. CAD forming up nicely. Then looking at the pound yen, right? We were looking for it to bounce to test that resistance. Did that. Now pushing back down. Why is it pushing down? We all know it's because of the yen pushing lower. Don't do anything on the pound yen right now unless it breaks below 181.80. Right, so I'm going to move this to about 181.80. Not going to do anything unless it breaks that support to get to my next level. I know that this is the next major level, but I'm sure that there'll be something in between, which this one here. So if it breaks below 181.80, think that we could see maybe a retrace before continuation back down. So you want it to close below, so 181.65. Stop loss maybe about 34. I typically have a bit of a wider stop on the pound yen, so about 40 pips. But interim level at about 80, almost 90 pips to the downside, still a 1:2 to the downside. If it pushes down, you could even be looking for it to come all the way down towards that 164 take profit level. Okay, so that's what I'll be looking for on the pound yen, driven down by the US yen. And also, if we do see the pound dollar continue to retrace, that could just pull the pound yen down, right? And just see that come down and bounce back up again, maybe at that point. Euro yen, this was what we looked at on Friday. Did not close below, bounce back up. Right now, I would still hold that same view. You would have to close below 155.60 before we could see the move downside towards that 154 level. I don't see this as potentially a high likelihood, because we are thinking that maybe the euro dollar could push up. As much as the yen can come down, we're going to see a conflicting move because of the euro dollar pushing up. So the euro yen is, I'll take that away actually, and I think that the euro yen could test lower, maybe that 155 level or 155.40 level before bouncing back up. We could even see this on the euro yen, just because of something like that, big drop, bounce back up, or this kind of move before bouncing back up, just being dragged up if the euro dollar continues towards that 1.10 resistance level, right? So I would be watching that. Any questions so far? Any questions so far? help me out, click that like and subscribe button. What I'm going to try and do today is that if you got no further questions, what I'll do is I'll leave the stream running on YouTube. Right, I'll turn off my mic, I'll turn off my video, I'll leave the stream running. I'll be monitoring this as we go, and if there's any updates, I'll just put it onto the stream straight away. Let's see if that, I'm just testing that out, and we'll see if that works better in terms of sharing live analysis. Okay, so it's going to continue running. It's going to continue running. If you do have any questions, put it into the chat. I will still be monitoring. If there is an idea, I'll still be looking at this. I'll be clicking away. I'll be typing stuff up, but voice and video will be off. Okay, just so that you don't hear me mumbling and rambling on and on. Okay, so with that, I'm on the road tomorrow, so I don't think I will be able to do a stream tomorrow. But I'll update you guys. I might do a recording later on in the day. I'm on the road, so please trade well, trade safe. If you haven't already, join the Discord channel. We can take our discussions beyond this session there, and also check out if you like I can stream on Discord. I can do that, but I'm going to try it on YouTube first. I haven't figured out how to do it on Discord yet. Thanks, Robbie. Thank you, Gorgeous. Thanks, Matic. Thank you, Angel Case. Thank you, Diana. Thank you, Vel. Thanks, Bia. Alrighty, so again, stream is going to continue on. Let me know if it works for you guys. Leave me your comments, leave me your feedback. I'm happy to find out more. Alright, so take care now.